topic of today's webinar is green bond market in Hong Kong. Now, this is a very important and interesting topic because sustainability issues and climate change are on the top of political and business agenda worldwide. And obviously, financial sector play a critical role in delivering the sustainability development goal. We all know that the financial sector is responsible for capital allocation. Therefore, if we manage to design a capital market that can actually channel more capital resources to the greener projects, greener activities, and channel less resources to the polluting activities, polluting businesses, then we will manage to deliver a greener world and less polluted world. So the financial sector is definitely critical in this context. And in order to achieve the sustainable development goal, it is important for us to have a good understanding of the ecology of the green financial markets and also to identify a strategy to develop these markets. And today, I'm very pleased to have two distinguished speakers to share with us their thoughts and experience, in this area. The first speaker that we have is Dr. Giorgio Verrante. Giorgio, is the head of Hong Kong Institute for Monetary and Financial Research, which is the research arm of the Academy of Finance. He's leading an applied research program of the AOF. And this green bond market in Hong Kong is the third report under our applied research program. If you remember, the first one is about artificial intelligence in the banking industry. And the other one is actually fintech adoption in Hong Kong banking sector. So now this is the third of the series. And Giorgio will actually share with us the key findings. Some of them are actually quite interesting and not trivial, right? So we look forward to some of his sharing on those. And the second speaker of today is Mr. Kenneth Hui on my far left. Ken is the head of Market Development Division of the Hong Kong Monetary Authority. The Market Development Division is a unit within the HKMA responsible for identifying policies to facilitate and promote development of the financial sector in Hong Kong. So he's really the key person driving policy change and leading some of the various legislative amendments for developing the financial sector in Hong Kong. As for me, I'm the moderator of today's webinar. My name is Daryl Ho. Some of you may have already known me. I'm the Executive Director of Banking Policy of the HKMA. I'm also responsible for green and sustainable banking, the management of climate risks by banks, designing the policy on that front. So if you do have questions towards the end related to this topic, I can actually help answer those questions. Now, before we start, I have some housekeeping issues. First of all, the webinar is actually conducted under Chatham House rules. And we will spend about 40 to 43 minutes first, to be for the presenters to deliver their presentations on the two subjects. First is the finding from the green bond market report. And second, for Ken to share with us, the green finance strategy in Hong Kong. And then, we hope we can have 10 to 15 minutes of Q&As. On your screen, there is a box that you can actually enter your questions. You can enter the question at any time during the seminar, and you can also specifically direct your questions to any one of us if you do have someone in mind. So without further ado, may I pass the floor to Giorgio. Over to you, Giorgio.
Thank you very much, Daryl. Thank you for the introduction. First of all, I would like to thank all the participants to the webinar for giving us the opportunity to share with them the findings of this new report. For the participants that are not familiar with the Hong Kong Institute for Monetary and Financial Research, I would like to add to Daryl's introduction and mention that the Institute, in its latest incarnation under the Academy of Finance, focuses the activity on monetary and applied research, with the later being essentially research on topics that are relevant to both market participants and regulators in Hong Kong. As Daryl mentioned, this report is the third of a series of new applied research reports that the Institute is releasing over time. In my discussion today, I'm going to cover several aspects mentioned in our report. More specifically, I will briefly discuss the state of the green bond market in Hong Kong and globally. I will also report, I think most importantly, I will report some research findings on the assessment of the benefits accruing to green bond issuers and investors. I will also present the results of a survey that we carried out to gather the views from and insights from local market participants participating in the Hong Kong green bond market, highlighting the opportunity as prospects for the market. And finally, I will highlight some suggestions put forward in the report regarding the strategies that can be pursued in order to accelerate the development of the Hong Kong green bond market as an international green bond hub. So let me move directly to the discussion of the first aspect that I would like to highlight. First of all, a sort of description of how the green bond market is evolving over time in the world. So the picture that I'm showing here with data from the Climate Bonds Initiative indicates a clear pattern. Over the last few years, the issuance of green bonds has increased dramatically. In 2019, the world issuance reached $261 billion. And more recently, the Climate Bond Initiative has highlighted on the website that an important milestone was reached. So during the past few years, accumulated issuance reached a value of $1 trillion. Let me emphasize one thing about this pattern. It's not only the growth that is important, because obviously this is an important pattern, but also the fact that the bond market, the green bond market, is only covering 1% of the overall total bond market. If we assign this pattern to the fact that over the past 5 years, the percentage of the average increase in bond issuance in the green bond market was 50% compared to 4% of the overall bond market, we can see clearly that there is a considerable growth potential in the market to take into account. So if we zoom in to Hong Kong directly, we can see that in 2019, the cumulative issuance of Hong Kong green bonds amounted to a total value of $26 billion. Half of those bonds were issued by financial institutions, 39% from corporations. In addition, it's important to note that in terms of group of origin, the mainland entities were the largest issuers, followed by Hong Kong issuers, the rest of Asia, and Europe. So this gives you a sort of general perspective regarding the development internationally in Hong Kong, but the success case of the Hong Kong market can be explained in light of the initiatives that have been put forward in Hong Kong during the past few years. Let me highlight some of those, but Kenneth will probably go through some of them in detail. First of all, the establishment of the Green and Sustainable Finance Cross-Agency Steering Group, with the aim of coordinating the management of climate and environmental risk to financial sector, accelerate the growth of sustainable finance and support the government climate strategies. So this will be probably some of the remit that Kenneth was going to discuss later on in the webinar. The launch of the government green bond program, that is one of the largest in the world. Then the Hong Kong Quality Assurance Agency that provides third-party conformity assessment to green finance issuers. And last but not least, the launch in December 2020 of the Sustainable and Green Exchange stage of the Hong Kong Exchange, which is a first-of-a-kind sustainable and green platform in Asia. So, as I said, it is important for us to obviously understand the institutional details of these markets, but also to understand the nature and characteristics of the benefit that can potentially accrue to green bond issuers and investors. In order to provide a more detailed analysis, in our bond report, the Green Bond Report, we actually commissioned 2 studies. One to the Market Research Division of the Hong Kong Monetary Authority, and another one to Professor Sophie Moina of the University of Toulouse. And before I go into describing the details of these findings, I want to highlight that both research findings point to the existence of such benefits for both issuers and investors. So in this slide, for example, you can see that for issuers, research findings suggest that green bonds generally enjoy a lower cost of borrowing, and this lower cost of borrowing is more tangible if the bonds are verified or certified. Also, green bond issuance lead to higher equity returns for the company that are issuing green bonds around the issuance period. Again, those changes are more pronounced when the green bonds are verified or certified. For investors, instead, we have evidence in our report, accumulating evidence, suggesting that green bonds may offer resilience during market downturns. So in the next few slides, I will try to go deeper in these two results, trying to highlight more the lower cost of borrowing benefits for issuers and the evidence for resilience for investors during market downturns. So let me start with the first evidence. So what we do in this slide is to basically report on the vertical axis. We have a difference between two yields, the one provided by a green bond at issuance and another one by a non-green bond with the same characteristic. So what we see here, the first column that we see in our slide, is that the difference between these two yields is negative, indicating that the yield on the green bond with the same characteristic on the non-green bond is actually lower. And how much lower? Is about 33 basis points per annum. However, this result, although is non-negligible and not obvious, as Daryl pointed out, if we go deeper and we try to understand a little more, we see that this benefit can be even higher if you look at bonds that are certified or verified. In the last histogram of this slide, you can see that the benefit or the yield differential, if you wish, amounts to 49 basis points per annum. In case the bonds are not verified, the benefit is still there because we have still a negative number, but the amount is not that large. It's about 5 basis points per annum. So that indicates that there is a clear, tangible benefit in terms of lower cost of borrowing to green bond issuers, but the benefit also point out to the role played by verification and certification. The second finding that I would like to highlight and share with you today relates to the resilience during market downturns. So let me tell you that I would like to use this slide to offer a perspective because the research on this aspect is still ongoing and more has to be done in terms of research work in order to understand this complex relationship. However, I think this graph can provide us with a useful perspective to discuss. So what we do here is we plot the dynamic over time of these two indices. We have one index that is providing a composition of green bonds, which is with a dark green color in the slide. And then we have another index that is a reasonable approximation of non-green bonds, which is in light in color in our slide. So what you see here during the period between January 2020 and July 2020, which is during the pandemic, around the end of the first quarter of 2020, there was a large depreciation of the indices. So there is a price drop, which is highlighted in the slide. But if you notice, the two indices behave differently, and the price drop exhibited by the green bond index were smaller than the one exhibited by the non-green bond index. So indicating that there is indeed a possibility for potential resilience during downturns or market turbulences. So some of you may ask, why is that the case? So some research argument put forward in the recent literature highlight the possibility that, for example, higher customer loyalty accruing to green issuers may be responsible for the behavior, since customers are more likely to actually not affect the profitability of green bond issuers during market downturns, or a more technical argument, which is probably portfolio-based, indicating that during downturns, investors may be inclined to downsize other assets before green bonds, in order to fulfill their green mandates and obligations. As I said, this research is still preliminary, ongoing, and more has to be done in order to understand the complex relationship. So all in all, if you look at the two pictures that I gave you before, there is a clear evidence, or at least a good preliminary evidence, suggesting that to both issuers and investors, there are potential benefits from entering the green bond market. Obviously, we want to understand a little bit more, and therefore, in our report, we have complemented the statistical evidence that I just presented with the survey that has been carried out and commissioned to Ernst & Young China in order to gather the views and insights from the participants in the green bond market. More specifically, we have surveyed and interviewed about 48 participants. 28 of those were issuers and 20 were investors. But in the interest of time, I will actually encourage you to look at the report for further details on the composition and other results from the survey. So what I will do in the next couple of slides is to focus on some key findings from the survey. The first finding that I would like to highlight here is essentially the result of our question to the participants regarding their perceived view of the advantages that can accrue to Hong Kong green bond market participants. So you can see that we have two different sets of results for issuers and investors. More than 50% of the respondents have highlighted that they perceive benefits by participating in the green bond market in Hong Kong by the fact that there are a large number of international investors and there are also government subsidies. They can basically help them with their activities. From an investor point of view instead, more than 40% of the respondents have highlighted that the presence of socially responsible issuers and the quality of ESG information disclosure are the main advantage that they perceive by participating in this market. Both of those findings point to a very important aspect, the fact that there is an important role played by Hong Kong as a leading international financial center, and the fact that there is an existing robust green bond infrastructure. We also asked the participants to actually quantify whether or not they were satisfied, first of all, with the quality of the ESG information disclosure in Hong Kong, and give us their own views and expectation about the continuation and participating in the green bond market in Hong Kong. As you can see here, the results are pretty encouraging in that the totality, the entirety of the respondents are satisfied, or to some extent satisfied, with the quality of ESG information disclosure. And the vast majority of the respondents also have manifested the intention to continue participating in the Hong Kong green bond market in the future. We also asked the participants regarding their own perceived views of potential challenges they might have faced by participating in the green bond market in Hong Kong. And these three elements are the ones that have been highlighted by the participants. So first of all, low public awareness about the green bond market, financial and time costs, or general transaction costs involved in the verification and certification procedures, and the existence of heterogeneous standards and taxonomy for green bonds. I would like to highlight that those are important aspects, but those are very common and already recorded for other international jurisdictions in other international green bond markets. So with this slide, I come to the conclusion of my presentation, but I would like to spend a little bit more time by just highlighting the suggestions that were reported in our report with the aim of, essentially pursuing a further development of the Hong Kong green bond market. Based on the opinions of the market participants and the research evidence, we actually have classified two different broad group of strategies. One to encourage broader market participation, and another one to perfect the green bond market infrastructure. So if we focus on the first one on the left, one of the first points that comes to mind is the promotion of public awareness to increase the size of local green investors. So this is an important matter, and I believe the publication of this report by the HKIMR is also part of this effort. The other point relates to the possibility of reducing the transaction cost associated with the issuance of green bonds and allowing to a broader list of recognized certification bodies for certification and verification purposes. So if we turn to the second group of strategies, the first 2 points actually lead to an indication regarding the convergence and the extent of green bond practices and standards, and also information disclosure. The improvements in these areas are important to encourage a broader participation, especially from ESG-mandated funds. The other set of strategies, for example, the construction of green bond indices and the promotion of green exchanges, are important also for operational reasons. Green bond indices are important to allow managers to benchmark in an easier way, and also the promotion of green exchange with information disclosure and dissemination allow a better functioning and information percolation to the market. The last 2 points are related to cross-border green bond issuance for enterprises in mainland China. And this is a very important point because it allows for a venue where both enterprises from mainland China can find source of green funding for their own project, especially green projects for tackling climate change. But at the same time, is also a platform where international investors can have exposure to green investment projects in the mainland. And finally, but not least, I would say the importance of positive signaling to the market and the government continuing commitment to sustainable and low carbon growth strategies. So with this slide, I will complete the presentation. I thank you for your attention.
Thank you. Thank you very much, Giorgio, for the sharing with us the interesting findings from the research paper. Obviously, the findings in the paper would have some implication about our market development strategy. For example, you have identified some of the things to improve, including promoting public awareness in the market. At the same time, also, highlighting, facilitating the cross-border green bond issuance is an important potential area that we can develop further in the market. So I think it would be interesting to hear what Ken is going to say about the green finance strategy. In particular, how we may further our development in the green bond area. Ken, over to you.
Thank you, Daryl. We very much agree with what Giorgio just said about the importance to improve Hong Kong's green finance market infrastructure, as well as to broaden the participation in the green finance market. We've been doing a lot of work in these areas, and many of such work is coordinated or done at the Green and Sustainable Finance Cross-Agency Steering Group. So what I hope is to use the next 10-15 minutes to take you through the kind of work that we've been doing at the Cross-Agency Group. Perhaps a little bit of background on why we set up that cross-agency group in the first place. As many of you would know, the different authorities, different regulators in Hong Kong have actually been doing quite a lot of work to encourage ESG adoption, to encourage green and sustainability in finance for quite a few years. But as we carry on the work, we notice that many of the issues are actually cross-cutting, relevant to not just, say, the HKMA, but also relevant to, say, for example, the SFC or the Insurance Authority or the Exchange. And as a result, in May 2020, the HKMA and the SFC initiated this group. We invited 5 other regulators and government authorities to join. The objective is really to have a group that cut across all the relevant authorities so that we can coordinate the management of climate and environmental risk to accelerate the growth of green and sustainable finance in Hong Kong, as well as to support the government's overall green and environmental strategy. Last month, in December 2020, the cross-agency group published a strategic plan, basically setting out 6 focus areas that we plan to concentrate on in the coming years in order to promote the sustainable development of Hong Kong's financial system. The idea really is to kind of concentrate mind and also to enhance transparency on what the cross-agency group do. So what I'll do now is to kind of take you through what these 6 focus areas are, what we've done in each of these areas, and what we plan to do in the time ahead. Okay, so the 6 focus area, the first one is risk. Basically, we want to make sure that Hong Kong's financial system is able and competently manage the climate-related financial risk. There are 2 kind of thinkings behind. First is to make sure that as climate changes, our financial system is resilient. That's the one area. But the other aspect is also to make sure that as climate change, Hong Kong can continue to maintain and also build on its global risk management center status. So to start with, we believe that it's important that financial institutions acknowledge and then use the right tools to properly manage climate-related risks. One example of what we've done is at the HKMA, in 2019, we launched a 3-phase approach to promote green and sustainable banking. We've actually started doing it already. So the first phase is to announce a common assessment framework to basically assess and evaluate the greenness baseline of banks. And then in phase 2, which we also have already done, is to release a white paper setting out the supervisory approach about governance, strategy, risk management, and disclosure at banks. We've also been compiling the practices in some of the financial institutions, some of the banks that have gone further in managing climate and environmental risks, and then share these practices with other institutions so that everyone knows what's the best way to manage these risks. So that's the first area, risk and risk management. The second area is on data and disclosure. We believe that it's very important that there is a good flow of climate-related information. So disclosure is one thing. We want to make sure that companies, for example, and investment products, for example, disclose the climate-related risk and management information. And the second is to make sure all these information, all the relevant data are actually available and easily accessible by the public, by the investors, so that they can more easily manage the relevant risks and also allocate capital to the kind of investment products and companies that really comply and meet the relevant risk management standard. Giorgio mentioned the HKEX, the green, the stage, the sustainable exchange, which was launched last year as the first multi-asset sustainable investment platform in Asia. So that's very important because the objective of the platform is to enhance transparency of products, as well as to provide information, resources on finance-related, sustainable finance-related areas. That's one important area. The other important area is done by the SFC. In April 2019, the SFC published guidelines on what SFC authorized funds should do. SFC authorized funds that focus on climate, green, environmental, or sustainable development need to disclose to the general public. They also create a database to house all the information on listed and unlisted products related to green and ESG, to increase the visibility of these products. So we believe these are all very important initiatives to make sure that the market has the relevant information. The third area that we focus on is on capacity building. So there are 2 parts to this. The first part, obviously, is market participant. We want to make sure that the professionals that are working in the industry have the right kind of training and courses so that they can pick up skills in green, in climate risk management. We also want to make sure that they have the incentive to take up these courses. We know you're all very busy, but this is an important topic, and we want to make sure that you actually find the time to learn about these issues. But I think green and sustainable, it goes way beyond just finance professional. It's also about the broader public and investor, because if you look at Europe, for example, is generally considered as one of the more kind of advanced market in green and sustainability. And there is the end investor, the retail investor that are actually driving the market growth. So here we believe it's not just the effort of the HKMA or our fellow regulator, but we also need to work with, for example, the Investor and Financial Education Council, as well as industry practitioner like all of you, so that we kind of do it together. The fourth area that we're focusing on is innovation and products. Green and sustainable finance is an interesting area where market forces have actually been driving industry development for the past, many years. Say, for example, the Green Bond Principle is a set of guidelines developed by industry association, which has been underlining many of the green bond issuances. But we also feel that the public sector has a role to play here. We can give them a nudge. And here at the HKMA, we're also thinking about using our supervisory processes and power to kind of encourage better take-up of more innovation, more product development, as well as to enhance the financial infrastructure so that willing issuer can do these new products more easily. So one thing that we've been doing is to assist the government in issuing government green bond. The program was launched in 2018 at 100 billion Hong Kong dollar. As Giorgio mentioned just now, it's one of the world's largest green bond program. Part of it is to raise funds to support the government's environmental initiative, but there is also an aspect of raising Hong Kong's profile. And we believe it has been very successful. When we did the inaugural issuance in 2019, we did a $1 billion year government green bond, and there were about 4 times oversubscription, and it was very well received. So we're already thinking about doing it again. The Financial Secretary announced in last year's budget that we will be issuing over 66 billion Hong Kong dollar of green bond in the next 5 years. So that's something that we've been working on. The two final areas kind of go beyond Hong Kong. The first is about mainland China. As you all know, green and environmental and sustainability is one of the key focus of the mainland Chinese government. And we believe Hong Kong has a role to play here. Partly is within the Greater Bay Area, where Hong Kong is designated as the green finance hub. But also, Hong Kong has traditionally be the bridge connecting mainland China and the rest of the world. And we believe we have we can play a similar role in green finance, particularly if we're able to establish standards and expertise that have the trust of both mainland China and the rest of the world. That's something that I'll cover in a little bit. The final aspect is collaboration. The cross-agency group is a good example of what different regulators in Hong Kong can do together. And we believe we can contribute to the rest of the world as well. We've been participating in organizations such as the Central Bank Network for Greening the Financial System, such as the International Platform for Sustainable Finance. So these are what we believe we can do to kind of develop expertise at both the international level and to make sure that there is alignment across different markets. So that's a very brief overview of the 6 focus areas that the cross-agency group will be working on. To kickstart the work, we've actually kind of pinned down 5 key action points that we'll be concentrating on over the next year or so. I'll quickly take you through them as well. The first one is about disclosure, which, as I mentioned, is a key area. So we'll be mandating climate-related disclosure aligned with the Task Force on Climate-Related Financial Disclosure across all financial sector, no later than 2025. So this is an effort to make sure that sufficient information is being disclosed, so to help investor and other stakeholders to understand the risk and opportunity resulting from climate change, so that we can facilitate capital allocation as well as market discipline and scrutiny. So that I think that put us, if not the first in Asia, must be one of the few markets across the whole world that have a similar requirement. So that's item number 1. Item number 2 is that we aim to adopt the common ground taxonomy of the International Platform on Sustainable Finance. Taxonomy, to those of you that are not familiar with the kind of all these terminology, is basically a catalog defining what kind of activities are environmentally sustainable. And taxonomy is important because a lack of consistent definition is often blamed as the key reason that caused confusion and raised the risk of greenwashing. At the international platform on sustainable finance, this common ground taxonomy is now being developed. Basically, it gathers all the taxonomy, the commonalities of all the taxonomy that are already existing within different IPSF membership countries or markets, including those in the EU and the mainland, which are two key markets here. And it is expected that the common ground taxonomy will be published in the middle of this year. So Hong Kong is a member of IPSF, and in addition to contributing to the development of the common ground taxonomy, we're expecting to adopt it with local adaptation once it comes out. So the idea is to first to align the taxonomy, the definition of environmentally friendly activities across different sectors in Hong Kong, and also align it with different markets internationally, so to facilitate capital flow across border. So that's the second action point that we'll be working on. The third one is on sustainability reporting. As many of you would know, the trustee of the International Financial Reporting Standards has recently issued a consultation paper to gauge whether there is support for a new sustainability standard board for developing and maintaining a global unified set of sustainability reporting standards. We believe something like this is useful to make sure that there's consistent and comparable sustainability reporting rules across different jurisdictions. So we are lending our support to it, and we hope that by doing so, we encourage more people, more stakeholders to support that as well. The fourth action point that we're looking at is, that we're working on, is scenario analysis. Climate risk is something unlike many other types of risk. A lot of the risk analysis at banks and financial institutions is done through statistical analysis of past data. But climate risk is different because it's forward-looking, and it could potentially kind of go decades in the future. So what we are kind of looking at is a different approach to use scenario analysis, to use the kind of what-if framework to see how we can best manage, financial institutions can best manage climate risk. So by looking at scenario analysis, we're basically asking the question about how climate change may plausibly impact the banks or financial institutions' business over time under different climate pathway, so that we can evaluate the resilience and also evaluate banks' response through strategic planning and risk management. Some initiatives are already underway. Part of our effort, the HKMA's effort to embed climate consideration into the supervisory requirement is done through scenario planning. We're also preparing for pilot climate risk stress testing exercise for banks, and have recently developed a set of guidelines for the exercise in 2021. So, please stay tuned. The final action point that we're working on is the establishment of a platform that will serve as a focal point to coordinate on capacity building, thought leadership, and it would also serve as a repository for green and sustainable finance resources. And that would involve not just the financial regulator and government agency, but also market participant as well as the academia. We all know that capacity building, capacity and awareness is a very important area. The HKMA, for example, has been working on it. We recently set up with the International Finance Corp under the World Bank, the Alliance for Green Commercial Banks, and that focus on developing capacity in the industry. But we believe, as the industry grows, they would demand more structure courses across different areas that can potentially fit together. And we believe we should work together with the industry as well as the academia on this. And this is something that we plan to do, plan to coordinate under this platform. Research and data are also critical because they would ensure that all the policy, all the products, all the services, and risk management tools have a sound basis. So we know that right now, a lot of the data and research have already been done, but they may be kind of sitting at different institutions, different silos. They may or may not be compatible, and they may or may not be, say, machine readable. So we want to change that. We want to kind of bring them together, and also if there are gaps, we want to identify them and try to fill them. So these are the 5 key action points that the cross-agency group will be working on. And together with the 6 focus area, that's the kind of work that the cross-agency group has developed so far. So that very much is my presentation. I'll pass it back to Daryl, and happy to take any questions. Thank you.
Thank you so much, Ken. There's obviously so much work to be done by all of us, including the HKMA. So I hope, our resources can actually catch up with the workload being, imposed on us. But for the time being, we are, dealing with these new challenges, with our best effort. We have several questions from the floor. The first one is about the local adaptation of the common ground taxonomy that you just mentioned. And indeed, taxonomy is an issue brought up, in the Giorgio report, that what is one of the main challenge facing the development of the green bond markets is the lack of a taxonomy. So there could be actually different views, as to what is green and what is not green, and therefore, it can't really help the functioning of the market in that way, and therefore, having a taxonomy which is widely accepted by the market is a very important part for the purpose of the development of the green bond market, but also, for the purpose of the other financial institutions, taxonomy also plays a key role there. So perhaps I can say a few words about, how we expect the common ground taxonomy to be adopted, in the context of banks. And then, Ken, you may also share with us, how you may see that the taxonomy may help the functioning of other parts of the financial sector. Yeah. As for banks, we know that the disclosure requirement, for instance, we require banks to disclose by 2025, according to the TCFD disclosure, framework. And one important element in the disclosure is really about, the bank's activity in financing green. And so what is green and what is not green is an answer to be, questions to be answered, in that disclosure. So the adoption of the common ground taxonomy in there is really to facilitate financial institutions reporting in the context of disclosure. That's one. And the other is that, in terms of risk management, obviously some parts of the industrial activities are more potentially more affected by climate change, and some are actually less, or even, facilitating transitioning. So the taxonomy basically provides us information on, what industrial sectors would fall under the first category and what would fall under the second category. And therefore actually also facilitating, how banks can actually manage the transition risk, for example. So that is the sort of the adaptation of the common ground taxonomy that we would expect to take place. But the details are to be further developed. As you may notice, we have issued a white paper in the middle of last year to share with you our initial policy thinking on green and sustainable banking. In the first half of this year, we're going to formally consult the market about our supervisory expectations. So there will be more details in there. And for the time being, we are keenly watching the work to be done by the IPSF and to see, how the common ground taxonomy is like. So that also depends on the outcome of the IPSF. And can you share with us some of the other areas as well?
Yeah, sure. I very much agree with what Larry just said. Just to supplement, say, for example, I think taxonomy and definition is also an important area in the capital markets, say, for example, in the issuance of green bond. And from our own experience of issuing the government green bond, for example, a lot of the time when we go out to do roadshow, we need to spend a lot of effort explaining what different green projects are and explaining the different kind of standards that they fall under. Obviously, some of these standards are local. Green building, for example, in Hong Kong, we use Green Plus, and in Europe, in the UK, in the US, they have different standards. So the adaptation comes partly also to make sure that the standard in the underlying project in overseas country, when they apply to Hong Kong, we have the equivalent one so that local issuers can really tailor and better fit their existing project into the framework.
So I hope that would answer at least partly your question. We have a second question related to the green bond market. Well, we all know that the banking industry in Hong Kong is a very strong element of our financial sector. So, and also the equity market. So some may argue that our bond market is a relatively weaker part in our financial market in terms of the depth and also the level of development. So how would you compare our green bond market with the other financial centers, the other jurisdictions that are also financial centers? How would you compare ours with theirs? Ken, do you want to take that question?
Yeah, sure. Well, this is something I think a very important point. We've been hearing a lot of people saying Hong Kong's bond market is lagging behind and all that. But actually, if you take a deeper look, Hong Kong's bond market is actually one of the biggest in the world and definitely the biggest in Asia. Bond market is different from, say, the equity market in the sense that it's an over-the-counter market. So there is, so say, for example, listing is very important in equity, but way less important in bond, representing only a fraction or a tiny proportion of the overall issuance cost. What is important in the bond market, in the primary issuance market, is where the bond is arranged. And in this area, Hong Kong is way ahead of other financial centers in Asia. In green bond, I have to say Hong Kong's lead is not as prominent as our lead in conventional bond, mainly because some of the green issuers actually go to Europe, which is considered as kind of ahead when it comes to green and sustainable finance. And I think we have to accept that and admit that. But at the same time, we're kind of continuing to improve our platform. The government has launched the pilot bond grant scheme as well as the green bond grant scheme with a view to attract more of these green bond issuance back to Hong Kong. We're constantly monitoring and reviewing the implementation of these schemes. The pilot period ends in a few months' time, so there could potentially be enhancement as well. And I think kind of taking a longer term view, the reason why Hong Kong has been doing so well in primary debt issuance has been that Hong Kong is the place of choice for mainland issuers issuing international bond. And we see that as mainland China continue to pick up its speed in kind of enhancing and improving its environmental standard, its firm's international expansion will also take on such a similar standard. And that could potentially drive green bond issuance in Hong Kong as well.
Well, can I add one point on that, the importance of common ground taxonomy in that context? Because Giorgio, in your report, you mentioned, one of the key roles that Hong Kong may play is really to do the green finance intermediation between mainland China and the rest of the world. So lacking a common ground taxonomy, it's really difficult to line up, the investors, from the rest of the world and the issuers from mainland China. You really have to speak the same language, using the same sort of a taxonomy standard in order to enable us to play a role to intermediate those green financial flows. So I think this is really one very important piece of infrastructure to facilitate the green bond market. I actually got a question for you, Giorgio. It's really about investors' preference. Well, we talk so much about developing the green bond market, what the authorities can do to encourage the development, what sort of requirements that we can impose on the market. But that's one very important element in that is the preference of the stakeholders, preference of the investors, whether they have a strong will, to allocate their capital into, green and sustainable projects or in green and sustainable investment vehicles. So in your report, you actually survey both Asia investors. Do you notice that there's any shift in the sort of investor preference that people are paying more attention to sustainability issues and environmental issues, such that they will naturally allocate more such capital into this area? And also, are there any evidence showing that when the second generation endowing the wealth from the older generation, there is a tendency for a stronger preference to allocate capital to those sustainability assets?
Thanks, Daryl. This is a very complex question. So let me try to answer in bits and pieces. Regarding the preference for ESG denominated assets, I think our experience is by anecdotal evidence in talking to market participants is they are certainly aware of the issues. They are willing to invest, and they're certainly trying to understand a little bit more. Going back to what we were saying, so the issue of standards and taxonomy is one of the hurdles that all of them are trying to go through in order to understand how to appreciate and implement them within their investment process. But nevertheless, this is a common ground among, for example, international institutional investors. But your question, in my opinion, is deeper because you're looking also at the behavior of retail investors, which was an aspect that was raised before. So Ken, you mentioned that in Europe, for example, retail investors are having the lion's share in driving the development of the market. Obviously, here we're not talking really about the real retail investor. We're thinking about high net worth individuals. And from what we understand from anecdotal evidence and the research, both from academics and the industry, are pointing out that this shift in preference is really occurring. So one of the recent reports that have been pointed out in 2020 highlighted that ESG preferences are really one of the common themes among high net worth individuals. And this is an important matter. If I may align myself a little bit of a commercial time for the Institute, this is an aspect that we will explore even in our future report, because we are working on something to be delivered in 2021 that is trying to understand the investment preferences and investment needs, for example, in light of demographic changes. And those are important matters because not only affect the newer generation, but also the investment preferences of an existing generation that is becoming older and becoming the silver economy. So all these elements together will have a concerted effect on the growth of this market and the development.
Right. Obviously, the private wealth management sector is a very key area where they may actually see the growth of this sort of sustainability product. So I thought, given our membership at the Academy of Finance also have, a good proportion of private wealth management practitioners, we may be able to benefit by, having our researchers to speak to the practitioners to understand more about the investors' preference and the market trends. I think that will be mutually beneficial to both the industry and the researchers as well.
Absolutely. Absolutely.
Well, we got another question about the application of technology in bond market and how we may actually leverage on the technology to enhance the development of the green bond market in Hong Kong. The question actually mentioned something about digital assets. I'm not too sure about what it means by digital assets, or do you mean by crypto assets or financial assets, but in digital form? But in fact, a lot of the financial assets are already in digital form, right? The custodian of bonds at the or the custodian houses are actually in digital form rather than in physical form. But indeed, there is a very good potential for application of technology in facilitating the green bond market development. I think something related to our joint green finance center or resource center that we are having in mind. Can you say a few words about how we may actually make the things digitally more usable, the resources available to the market participants?
I think there are a few aspects to this one. Just I guess to start with green bond, I guess when the person asks about green digital asset, may have in mind things like blockchain, DLT technology, things like that. We have actually been looking at this. We have no answer yet, but it's an issue that we've been studying. We kind of look at it from two aspects. One is from the green asset kind of aspect. The other one is from the kind of bond distribution aspect. From the green asset aspect, a lot of the time when we talk about issuing green bond, one of the key concerns is whether the proceeds that are being deployed are actually used at green causes. So in theory, by using blockchain, by having the impact of the proceed deployment constantly being updated at the blockchain and then kind of published to, basically everyone, you could help monitor the use of proceed. I think that's one commonly cited aspect. The other aspect when it comes to green bond is about the distribution of the bond itself, because as you know, bond right now is a rather kind of wholesale market. And one of the key hindrances for it to reach the general kind of investor base is the high cost behind this over-the-counter distribution model where you have investor and then custodian and then the central depository, and these are all very costly. And by using a DLT technology, you could in theory bypass that. And that's particularly relevant in the case of green bond, because we talk about the importance of raising awareness among the general investing public. And if there are more participation, more retail and general participation in green bond, we could potentially raise that awareness as well. So that's kind of the theoretical benefit of that. I guess when we think about it at the HKMA or at the cross-agency group, one key difficulty is that when it comes to the underlying asset, we need to make sure that there is the kind of constant data feed into the blockchain, which may or may not exist in the assets that we talk about. And when it comes to the bond distribution side, we also need to make sure that all the existing regulations are complied with, and that there is the kind of support where you have basically digital money feeding into digital asset and all this whole ecosystem. So, I mean, as I said, we have no answer to it, although this is a question that we're thinking about. As to what Daryl mentioned just now about at the cross-agency group, as I mentioned earlier, we're thinking about establishing a platform as the focal point, and one of the platform's function is on data. And this is something that we believe technology could help. And in terms of just gathering the data, putting it into a structured format so that such data can be more easily used by, say, for example, financial institutions when they go to, say, climate risk modeling, they have more readily available materials to play with.
Thanks, Ken. I'm conscious of time. We have less than 3 minutes left, but I thought we can actually take one more question before we close this webinar. We do have a question from the academia asking about how we shall develop the green finance as well as ESG talent to meet the need of the industry. I think this is one question that we face very often, from the industry practitioners, where we can find expertise, where we can find experienced people to do the work. Any additional idea that you can share with us on capacity building?
Yeah, we have been speaking to market participants about this as well. And some of the feedback that we've heard, and I'll be honest here, is that, it's very difficult to find training courses in Hong Kong. When you do find the courses, it may not be too suitable and may not fit together so well. But in fact, banks or even the HKMA, and as I mentioned just now, us together with the International Finance Corp, we've been organizing quite a lot of training courses. So I think the answer would be, one, to make sure that all these existing courses would be accessible and available to people that are actually looking for them. And that's, again, coming back to the focal point, the joint platform that we were thinking about establishing. One of the key functions of it would be to be that kind of point where people can go to and find the right courses for them. And of course, we know that there must be gaps in the market. And once we have everything in one place, it will allow us to identify the gaps more easily. And we'll be working with market participants as well as the university and other training center as well to develop the needed courses.
Yeah, I think it's also important for us to speak to the universities to share with them our problem statement. Obviously, the universities are training a lot of risk professionals, financial experts, And if we can actually share with them our problem statement, we can actually embed some of these green and sustainability issues in the design of the curriculum. That will actually be really helpful. We will have a next generation of risk professionals who would be equipped with all these knowledge and skills in relation to ESG and green. Now we have a 30-second left, so I really have to put this webinar to a close. I really want to thank the audience for participating in this webinar and raising very interesting questions. I apologize for not being able to address all the questions. I do have questions about the green loan market, but let's find other opportunities to exchange on those subjects. Before I wrap up the whole webinar, I would like to thank Giorgio and Ken for sharing with us their thoughts and experience in the research findings of that report. And again, I would like to encourage the audience to take a look at the green bond paper. I think there's a lot of things that Giorgio didn't cover in his presentation, and there are a lot of useful findings that are relevant to not only policymakers but also industry practitioners, and that's why we call this applied research program. I understand that we have actually an upcoming research paper which is on high frequency trading, its implication to market development and market stability as well. Yes. So I think that is another important piece coming out from our applied research program. So stay tuned. And for now, thanks again for participating in this webinar. I'll see you next time. Thank you.
Thank you.